Weekly stock market update, and what an incredible week it's been yet again. Let's get right into it. And one of the first things that you will already know is, well, we're nearly at 40% returns on the NASDAQ. So if, like me, your pension is heavy on NASDAQ stocks, you've just had you're about to have a more comfortable retirement than you had previously anticipated. The S&P is up 15, which is unusually high. The UK markets, of course, lagging well behind. So if your pension is largely in UK stocks, I'm sorry, I'm 4 times richer than you this year in gains. Sorry, I don't know why you don't have your SIP and ISA in US equities, but there you go. Let's look at valuations. Price to earnings ratios. Microsoft, Apple, and those all looking expensive, as they always do, but it's if you take a traditional measure of share price compared to profitability, which is only one measure of valuations. Energy and banks looking cheap. We'll come to those. Performance, phenomenal across the board yet again, and it's expanded into more of the S&P 500 stocks. This is over the past week. And you'll see in a moment how I anticipate that to continue. This is price earnings growth ratio. So it's a measure of share price compared to the rate at which profits are expected to grow. Again, Microsoft and Apple might look expensive. Google doesn't. Meta doesn't. But then again, you've got to factor in that the market may have got their anticipated growth in profits wrong. They may well grow more than the market anticipates, and that's usually been the case. So I'm less worried about tech companies looking overly expensive, though CRM Salesforce does look, on a price to earnings growth ratio, a bit expensive. Busy week for me. I did a conference with the Financial Times on future of private investing. I'm going to get into stocks in just a second. And on the BBC the same morning, talking Federal Reserve. You can see all of that on my links, alpeshpatel.com/links. Let's look at the S&P 500, shall we? And what that showed. Well, it showed exactly this, that we're storming ahead. We're just going upwards and onwards. And I wasn't anticipating that. I was worried we might get a pullback, worst case even to down here. So all those miserable gits who kept saying that, oh no, the market's going to fall, boy, have they been wrong. And it's rising. Now you see this monthly MACD, that's going to go here. And only at that point would it be then overbought, because you can see what happens when it's overbought. The market tends to fall, and we're way off that marker. This is the weekly and monthly stochastic. And, well, all things looking pretty healthy. Not so much for the UK market. That's overbought, and as I've said before, more likely to fall. Also because what we've got is what's called a negative divergence on the MACD. Bit technical, but don't worry about it. Okay, how about the individual stocks? Well, Apple, great. That's the base case. That's the bull case. We will get there. And that's the bear case. And you can see a lot of the banks like it. The monthly MACD still got room to move. I've been buying more Apple, and I'm happy. This is what the current price is. Average is what the average analyst thinks. That's what the highest analyst thinks. And this is the return you would get if it hit what the average analyst thinks. Okay, analysts are wrong. It's actually going to go here. They're underestimating Apple, and they always have. Alphabet, similar story, upwards, onwards, fantastic. MACD, lots of room before it's overbought, and therefore I've bought more Alphabet. And again, what the analysts are wrong on that. Currently it's 125. The highest they think it's 160 within the next year. It'll go more. Microsoft just been going in one direction. I've bought more of that. Yes, it could pull back into this, might pull back even worse, but at the moment all the money seems to be going into this because of what we expect on AI. More people continue buying it, more people will continue buying it. Amazon, straight up, I've bought more, and you can see again flat to rising, ample room. You know, we got into this in January, and you might want to have a look at my Telegram, because you would have got into all of these and had some good returns. That's on alpeshpatel.com/links. We've not finished yet. There's a hell of a lot more to cover. Okay, so what do the analysts think? You can have a look at that. Pause the video if you wish to have a look at that in more detail. The analysts are wrong. It's going to do a lot better than they think. Disney's been a bit of a stinker for me. It's just sort of flat. I've not made any money on it since buying it in January. Why don't I get rid of it? I guess I could and just buy even more of some of the stocks I'm about to mention. But for now, I'd like the diversity. I'm going to hold on. Nvidia, of course, since January when we bought into it, has been plugging away. Upside for now, well, at some point it's going to pull back before it continues going higher. That's where we are with what the analysts think, and now this is starting to look a bit overbought. This will be a good test to see what happens with the other tech stocks when they get to this stage. They're not at this stage yet, but they will get to it, and the stochastic is probably likely to have a bit of a pullback. I thought last week would have been a pullback, but it wasn't. That's the average forecast, which will give you a 5% return. The high is 710. I think the 710 is the one that's correct. Tesla now has broken out of this downward move and actually resuming this upward trend, and we expect that and like it again. It was one of our special situations, and in January I said it would do this, and it's doing that, so you're welcome. And that's again what the analysts think. They're a bit more pessimistic. Elon Musk is not stupid. He's going to go to Italy and talk about AI, right? There's Meta, boom. Still a way to go before it gets overbought, but I've bought more of it anyway, and that's what the analysts think with that one. Chipotle, as I said, an AI play as far as I'm concerned, and we know it is, and that's been one of the great picks for us and a bit of a diversifier because it's retail, and this is where we are on that. I'm not sure if we'll end up holding this for the whole 12 months. Remember, we tend to hold stocks for 12 months. And then get out. Still got a bit more for you, but just a reminder to like and subscribe and all those wonderful things you lovely people do. That's the Chipotle analyst figures. Have a look. ServiceNow I've bought more of as well. That's where we are with it. That's what is going to happen. And now it's becoming a lot more clear it's going to happen. And clearly all the banks love it as well. What do the analysts think with it, though? Well, they're not so enamored, but there's more room. Have a look at my campaign for $1 million. Particularly if you're looking at SIPs, ISAs, and wondering why your pension is performing poorly and why and how you can get more empowered and learn more to improve your SIP and ISA, especially if you've sold a business recently or you're a cash-rich, time-poor professional. We can get the data out to you and teach you how to, well, basically get an improvement on your poorly performing pension, which the IFAs are messing up and the wealth managers are messing up. Let us know. Thank you.